Hello, everyone. Good evening. Hi,
Hi, Ronnie.
yeah. Hi, guys. Good evening. Thanks for joining us, everyone else. Good evening, everyone. Thank you for tuning in to our session tonight, where we will be discussing about the three exchanges in Indonesia, Singapore, and Malaysia. I think it will be a very interesting topic. So this session is organized by Stockbit, and we both Indonesia and Malaysia, and we actually have a very special guest with us here today, Gerald from Beansprout. Gerald, say hi.
Everyone.
uh, yeah, so everybody that is here already, please say hi in the comment section if you can hear us okay, or if you guys are trading in any two of the three markets that we are talking about here today, right? And please don't be shy to jot down all your questions. And before we start, I think what I'm going to do is I would just like, because I like to keep things organized, I'm just going to run through some of the agenda for the night. These are some of fingers crossed. We'll try to cover this session in about 1.5 to 2 hours. So we'll start with some introduction, some statistics, and basically the three of us will discuss about some of the key themes and market outlook across the three exchanges. We'll discuss about some of the similarities and differences across the various sectors. And yeah, after that, we'll talk about some other smaller matters like market participants, fundamental analysis versus technical analysis, corporate governance, and whatnot. We'll try our best to try and address as many Q&As as possible. So please jot down in the comment section. So yeah, I think without further ado, I would like to introduce our speakers. Maybe we'll start off with Gerald, and lastly, I'll talk about a little bit about myself as well. Yeah, Gerald, over to you. Please introduce yourself and maybe about Beansprout as well.
Okay, thanks, Ronnie, and hi, everyone. Thanks so much for joining the webinar tonight. My name is Gerald. I'm the founder and CEO of Beansprout. What we do is to help investors make better financial decisions, and we do that by providing them with financial insights. Before I started Beansprout about 2 years ago, I was an equity analyst. So looking through all the numbers and making stock recommendations. But we won't be making any stock recommendations tonight. But what we hope to be able to do is to share some of our views, our thoughts on each of the different markets, so that we can all learn more about what is happening throughout some of these areas that we are all very interested to find out about. Over to you, Vivi.
Yes, thank you, Gerald and Rondi. Hi, everyone. I'm Vi. I'm head of customer research at Stockbit Indonesia. So for those who are not familiar with Stockbit Indonesia, basically we are the only app in Southeast Asia that combines the social networking community as well as the information aggregation and data analysis, as well as stock trading in Southeast Asia. So we see ourselves as the most complete stock ecosystem for both new and experienced investors to trade, learn, and get new information on the listed companies as well. And before I joined Stockbit and Bibit, I was also similar to Gerald, where I was an equity analyst. A similar job, used to analyze a certain sector and make stock recommendations. But again, similarly, we're not be making any stock recommendations today. But yeah, I think we have a lot to talk about the similarities and differences in each of our respective markets.
Which sector were your specialty, guys?
Mine was oil and gas, so I guess I managed to see the peak period for the oil and gas sector in Southeast Asia when oil was above $100 per barrel. All the oil services companies were getting orders on a weekly basis, but then also saw oil going down to below $50 per barrel. And all the companies had to actually restructure to be able to get through the downturn.
Yeah, for me, I've covered multiple sectors, but I say I probably covered consumer the longest. So yeah, Indonesian consumer as well as Philippine consumer for a very short time. But other than that, also used to cover some of the infrastructure names. Similar to Gerald, although not oil and gas, but in Indonesia infrastructure, I also saw the peak and the trough of the infrastructure cycle.
Very interesting. Well, a little bit of intro about myself. Yeah, I'm very honored to be in the presence of two very renowned sell-side analysts. I myself used to be on the buy side. I used to trade for CMB Institutional Trading Department before I left CMB in 2017, and so I helped Stockbit to expand in Malaysia. And yeah, ever since then, I've been, on the grounds in the Malaysian market, sitting down every day and looking into the in and outs of the Malaysian market. So I would say that I am pretty familiar, as there's still a lot of things to learn in Kuala Lumpur Stock Exchange. So yeah, I think let's get the discussion forward. Before we start, I think I would just like to share some very interesting statistics about the three markets that we have today, right? So just for everybody's information, and I just gathered this together with Gerald and Fifi earlier, some interesting stats, and this is based on January 2023. Okay. So do you guys know that in terms of market capitalization of all the listed companies across three exchange, SGX is the biggest at the moment with 630 billion US dollars equivalent. And then IDX is second with about 628 billion US dollars market cap. After that is followed by Bursa Malaysia, which is about 430 billion US dollars. Now, when it comes to the number of stocks, however, Singapore SGX is not so many stocks. There's only about 650 counters in SGX. IDX, I think recently they have been catching up with the crazy amount of IPOs, which I think Fifi will touch on later. About 840 names in IDX now. And Bursa is the winner for this with about 970 stocks. And lastly, when we talk about the average daily value traded in US dollar terms, about 680 million US dollars per day in terms of value. Bursa is about 530 million, and SGX is about 700 million US dollars. So what we can see here is, the three markets are very comparable when it comes to size. So yeah, I would love to dig deeper about this with you guys. So I think, first and foremost, I just want to ask you guys, Gerald and Fifi, because you guys are leading some investment community in both markets. What are some of the key themes and just the general market outlook in your exchange at the moment this year?
Okay, maybe I will start. So I think for Singapore, if you look at 2022, what was very interesting is that it is not just one of the best globally. Singapore did very well in 2022. This is because it's always seen as a value market. So while you may not be able to find a lot of exciting growth stocks in the Singapore market, if I want to look for stocks that are trading below price to book, price to earnings below 10 times, dividend yield above 5%, this is the market where you'll be able to find a lot of stocks like this. And I think if you look at the past year, value outperformed growth very significantly, which is why Singapore did so well last year. If we start to look into 2023, then I think what we are seeing is that a lot of the trends that have started in the second half of 2022 have continued. This is really driven by the whole reopening story. So I think the first to reopen. Singapore also was quite fast to reopen our borders. So by the middle of last year, we started to see tourists coming back. So that provided a boost to the economy. And then that has effectively continued through most of the second half of last year and into 2023. So I think for 2023, one of the key themes is still around this reopening. Because of the fact that when Chinese tourists start to come back, that is providing a very significant boost to the economy. If we look around us, I was just having dinner in town just now. At my table was a group of tourists. And then if you were to look at some of the people who are coming to Singapore to buy houses, to rent apartments, that is very strong as well. So all of that is providing a that investors are looking at for 2023. I guess apart from that, because Singapore is a very open economy, whatever the US Fed actually says and does would have a very significant impact on interest rates in Singapore as well. So that's also another big area where investors are keeping a very close lookout for, given that regardless of which are the sectors that you're looking at in Singapore, whether it's the banks, which is one of the key components of the index, or REITs, which we'll talk more about later, they are all very driven by the interest rate direction. So I think reopening, interest rates, those are really some of the key things that investors are looking out for this year.
Yeah, I think for Indonesia, similar to what Gerald said about Singapore last year, I think across asset classes for Indonesia, I think we are performing one of the best performer as well, doing relatively better compared to other markets. But I guess for different reasons than what was mentioned, I think one of the reasons because, of course, as we know, commodity and it being one of the countries whose main economic driver is commodity, there are several listed names, like the commodity names that has done very well. So yeah, even for this year, the theme is that despite all the negativities, right, globally, so for example, about the weak economic outlook, some are even calling for a recession in the more developed markets. I think the view is that Indonesia has always going to be one of the more resilient economy in the region. Partly also still supported by relatively stable commodity prices, and also in terms of economic growth, right? I think if I look at the different sectors, we have some sectors that could be the main support pillars. So, for example, if I talk to different fund managers and the stock community in Indonesia, right, I think a lot of them is still very positive on the banking sector. Why is because in terms of earnings, right, the banking sector is still expected to book double-digit, low teens kind of earnings growth, and that is after a very spectacular earnings growth last year. Like the big four banks in 2022, most of them actually growing by 30-40% year on year in terms of earnings, and on top of that, right, 2023 they're expected to grow by low teens kind of earnings growth from the consensus. Reason is because the LDR is still relatively healthy, and also loan growth demand, which is expected to come from both capex and working capital loan, as our economy is still recovering from the COVID, as well as the expected still resilient and strong consumer spending, especially as we are expected to have a more beneficiary from election spending in the second half of the year. And that brings me to the second kind of consensus view on the themes of the Indonesian market. So yeah, the second theme that a lot of people are looking out for is on the consumer sector. Mainly as what I have mentioned on the demand side, people are expecting some benefits from social spending and the pre-election spending. But even on the supply side, right, I think a lot of the consumer companies in Indonesia have been increasing their prices in 2022 as commodities price also increased. And in 2022, in 2023, the consensus are expecting that some of these commodity prices is going to correct a little bit. So there's going to be some margin improvement from there as well. And the third theme that are actually sprouting out in Indonesia is actually on the other commodity names. Why I said other commodity names is that, other commodity except for coal. So we actually see a lot of enthusiasm in EV-related metals. So the nickel, copper, aluminum names, as well as the energy sector, like the oil upstream, as well as the oil support services. So those, and the main driver for that is mainly the expectation that China reopening, which will help support the energy prices, as well as Indonesia has been pushing for investment in the downstream segment and to get into the global EV supply chain.
Okay, thanks, guys. I think there are a couple of, very similar theme. I think even in Malaysia, China reopening theme is one. When in the beginning or towards the beginning of last year, when I was reading about multiple investment bankers and brokers' outlook for this year, I think a lot of them are still very. It turns out to not be so true, right? Like so far, 2023 has been a very good year in January. It's a trap or not, it's yet to be seen. But yeah, generally speaking, a lot of the fund houses are very bullish on healthcare in Malaysia, not on the glove side, because in Malaysia there's a lot of medical supplies like gloves and all that, but more on like the hospitals. I think those are one of the very popular defensive picks in Malaysia. Other than that, they're also very bullish. Some are very bullish on the construction side of things because last year we got a new government, and from the new government, what we had seen is some optimism that finally perhaps some infrastructure spending would be on the cards. Lastly, I think on the China reopening play, tourism, that is definitely another theme, and I would say that the biggest beneficiary when it comes to US and China trade war. So what has happened is, because US and China is having this trade war and deglobalization and whatnot, so a lot of the flows to Malaysia. So, just now you guys mentioned about tech, but I think tech, when the definition of tech across three different markets is very different. In Malaysia, technology is more towards like manufacturing, tech manufacturing, like your semiconductor and your precision manufacturing and whatnot. So I think this space is still very much being looked into. Last year, it has a very bad year because valuation was just normalizing. It was highly valued from 2021 going into 2022, and what had happened was, because there is a valuation readjustment, so it was one of the worst sector. But I think this year perhaps things would normalize again, hopefully. Yeah, so I think I know I don't really want to get into Q&A, but Gerald, there is one very interesting question here that just ties into what we just talked about in terms of the tech manufacturing sector and valuation, right? So I think what we have seen in Malaysia vis-a-vis SGX is that, our tech manufacturing sector so far, generally speaking, there is always a higher valuation when it comes to, their PE. Not necessarily that they are bigger or better, but it's just valuation-wise is always higher. Why is that?
Okay, I think this is not just specific to the tech sector. It probably relates to the whole market. And it is something that I would say a lot of investors are aware of, have looked at various reasons behind it, but no one has really come up with a good reason as to why stocks in Singapore trade at a lower valuation. I think just one of the few reasons could be that if you look at the liquidity for each of these different markets, which is something that we can discuss in more detail later, I believe for Malaysia, you do have a lot of domestic liquidity coming through from your local funds. Unfortunately, for Singapore, we don't actually have that. Quite interestingly, our local sovereign wealth fund has also made it a point not to invest in the Singapore market. So I guess that would have been one of the key differences explaining the differences in evaluation. So I think that is one area that the government is aware of, have looked at ways to also get the sovereign wealth fund to also start looking at the Singapore market. There has been a private market fund that was set up last year, meant more to support the, I would say, companies in the pre-listing stage. And then hopefully that will translate into a higher valuation after these companies actually go public. I guess apart from that, there are other factors that have been mentioned by different investors. Corporate governance will be one of them. The growth prospects will be another. But I think generally we are still able to find good quality tech companies in Singapore, and they shouldn't actually be trading at a lower valuation compared to global peers. And I guess those are effectively the different opportunities that can become interesting if we actually spend the time to look for some of these names.
Okay, thank you, Gerald. Staying on to the tech sector, Fifi, in Indonesia, is it more software based? Of course, we all know about the Goto and the Bukalapak IPO. Yeah, how do you define the tech sector in IDX?
Yeah, I think so we have one data center names, but it's not too liquid. But it's a big name, but it's not too liquid. But so I guess the tech names that we typically talk about is more on the, I would say, more on the e-commerce type of tech. So more consumer tech names. So a lot of them is actually marketplaces, as well as a little bit of fintech and transport logistic included in there. We don't have much tech manufacturing. Actually, it's a very different versus the tech that you mentioned about in Singapore.
Very interesting, because in Malaysia, honestly, a lot of people are talking about Penang state as like the Silicon Valley of Asia and all that. So that is actually very interesting. All right, Gerald, do you have any comment on the tech sector in SGX at all?
Yeah, so I think the tech sector in Singapore is closer to the tech sector in Malaysia. In fact, a lot of these companies have their manufacturing base in Malaysia, including in Penang, just to be able to keep costs low. So I think at a point in time when there was the US-China trade tensions, and people were looking at potential beneficiaries, the Singapore hardware tech companies were seen as potential beneficiaries as well. But going to 2023, performance of these tech companies, just like we have seen so in the most recent US reporting season, even within the big tech names, there has been a big divergence between something like a Meta versus your other big tech names, really depending on the exposure that they have, their key customer, whether it's an Intel or other semiconductor company, there has actually been a very wide divergence in their reported earnings. So I think it goes back to the fundamentals of each of these companies in that we have not generally been able to see a trend towards reported earnings, the outlook of these firms, apart from the fact that they might have a similar move around the interest rate direction. But apart from that, how they have actually performed over the last 1 year has actually diverged by quite a bit.
That's very interesting, Gerald. You know, in the back-end semiconductor space, but I think, as you mentioned, you know, there has been a lot of R&D that is being put by the big MNCs like Intel and whoever. And what has happened then is, you know, slowly, the Malaysian SMEs are getting more and more sophisticated. I would say that, you know, even soon there will be one. So we are moving forward, I would say, from back end to the front end semiconductor supply chain. So that's very interesting. Okay,
And I heard there are EV companies in Malaysia as well, right?
Sorry?
I heard there are EV exposed companies in Malaysia as well, right?
Okay, yeah. So yeah, let's move into EV. I think that's something that, you know, IDX definitely have a lot to tell. When it comes to EV in Malaysia, yes, there is actually a public listed company here, out of which is, I would say, very related to Tesla. They are, as a matter of fact, they manufacture, or, you know, they do factory automation for Tesla's battery assembly line, if I'm not mistaken, you know. So yeah, so that is very interesting. That's one company. And there are some other companies where, you know, they also do factory automation for all the other EV names like Lucid, like Lordstown. So that is an case from the Malaysian public listed companies. There are also some companies, the big OSAT guys, you know, they are dabbling with. So those are, I would say, some of the exposures towards EV in a global manner. Other than that, you know, there are some exposures in the infrastructure electric vehicle space, but that is very much domestic based, in a sense that they are trying to bring in all this battery charging and infrastructure for future EV development in Malaysia. But yeah, if we are talking about EV, and I think this is where Fifi will also mention, there are some EV related play, in a sense that there are some commodity guys as well in Malaysia that is somewhat related to, you know, there are some manufacturers or producers of, say, your tin, your silicon manganese, silicon metal. Yeah, these are some of the exposures towards EV, I would say, from a commodity angle. Yeah, Fifi, what about IDX?
Yep. So yeah, I think as everyone might have heard already, in terms of the government, very strong in Indonesia. So yeah, the government is pushing to get into the global EV supply chain. And in terms of the exposure in Indonesia, right, I think a lot of the exposure that is available right now is mainly on the upstream metals, upstream EV related metal space. So a lot of it is like nickel mines. But starting, we see that some companies are actually investing into the downstream segment as well, which is again in line with the government move, right? That they want, they don't want to just export the raw materials; they actually want to get more value added in the value chain. So we started to see some companies investing in, for example, the aluminum processing, as well as the nickel processing, the smelters. So these are some of the names that are starting I mean, they are already listed, but they already have this project in line, so it's expected to be contributed to their earnings in the next few years. And also on this, right? So one of the bigger deals that are being looked out for by the investors, I think this has already been in the news, so it's already public. But basically, one of the company that I mentioned that have exposure to nickel mines, they are considering to IPO one of their subsidiary, of which the subsidiary is expected to be a vertically integrated EV battery name. So not just a nickel mine, they will also have the downstream processing to actually make the battery. Sorry. And yeah, this is expected to be one of the bigger IPOs of the year, although we don't have any clarity in terms of the timing or the size of the IPO yet, but definitely one of the most anticipated deals by the institutional investors and the retail investors as well. And aside from this more, I would say, battery material names, right? We are starting to see smaller names, which are downstream auto, the downstream EV vehicle itself. So we see some of the companies that any company, but this is one of the development that I think people are looking out for, because the government, I think, was just talking in the news around 1-2 weeks ago that they are actually thinking of subsidizing the price for EV vehicles. So again, scheme is still unclear or how big the subsidy is. But Indonesia has always been dominated by the Japanese car principles. And if the government give a subsidy for the EV names, of which some of the Chinese ones, whether that will actually change the landscape of the auto sales in Indonesia is one of the factors that are being watched for by the investors as well.
Okay, so I guess for Singapore, we don't have any nickel, tin, upstream companies. We don't have any OEMs as well. So we don't even have a tech company that has got a sizable exposure towards the EV sector. But what we are very good at is to get companies to have a secondary listing in Singapore. So last year, we saw that NIO had a secondary listing in Singapore. The shares are fully fungible with that in the US. So the idea was that if there was any risk around the users can actually transfer their shares to the Singapore market as a way to be able to continue trading in NIO shares. So since then, the interest in the Chinese EV sector in Singapore has actually picked up because people started to try to understand how is NIO different from BYD, different from XPeng, what are the different parts of the value chain. And I think also what the SGX would try to think of is if we do not have any domestic companies, how can investors still get exposure to the EV sector? So there was also a listing of a China EV such that if investors want to get exposure to this sector, they can look at this ETF as a way to get diversified exposure rather than looking at single names.
Okay, very interesting, guys. So I think I want to move on to another sector, because if not, we'll stuck in tech and EV for a long time. I think one of the sector out of which Gerald is an expert is in oil and gas. Perhaps I'll start in Malaysia, right? I'm not sure how it is like in IDX and in SGX, but in Malaysia, because of course Malaysia, from the existence of Petronas, they are very involved in the space of oil and gas. But other than as a matter of fact, because of Petronas, we are actually very populated with midstream oil and gas players. We only have, I would say, one upstream oil and gas player in Malaysia, and the rest of them are in the midstream. So this ranges from those guys that creates or rather that provide service like FPSOs, or the shipping guys, or the or the OSV guys, right? So these are where a lot of the expertise in oil and gas are in Malaysia. Other than that, of course, there's also, for instance, like the piping people and whoever. That's where I would say the oil and gas sector is in Malaysia. It's very heavily concentrated in the midstream. Now, I think what has happened is, as a matter of fact, the oil and gas sector, the energy sector in Malaysia is so far in 2023 had been the best performing sector. It was not. It was also one of the better performing sector last year, but it has continued into this year. And a lot of the midstream oil and gas players, they continue to perform well in terms of their share price. So yeah, maybe I'll pass it on to Gerald and Fifi when it comes to your exchanges oil and gas sector.
So for Singapore, it is quite similar, very focused towards the oil services companies. We don't have any upstream company that is having a very significant exposure to Singapore. But the other interesting fact is that a lot of oil services companies actually went into liquidation in the previous downturn. So what we are left with would be just the industry leaders, including two of the oil rig build. Quite interestingly, they are also now going through some form of consolidation. So for the last 20 years, investors have always talked about consolidation between these two large companies. We only saw it being last year, and the transaction is now being quite close to completion. So I guess we are seeing a very significant trend towards consolidation, even within the oil services space. The other key trend that we have seen, and I think this was something that companies embarked with the downturn in the oil and gas industry, is that they're all moving towards renewables. Because I think it was never certain around the recovery in oil prices. So for the companies that managed to get through the downturn, had a stronger balance sheet, they started to invest more in the renewable sector, whether it's offshore wind farms, offshore wind turbine installations, just to be able to ensure that they have a feasible business model, even if oil prices were not to recover to $100 per barrel. So I guess that is really the...
Yeah. I think for Indonesia, so for Indonesia, if I look at the upstream names, right? To be honest, we only have one big ones that is sizable. So for example, Medco, this is the only sizable ones, like around 2 billion US market cap. Of course, we do have other upstream oil names, but it can be a lot. So those are not names that institutional investors are easy to take position in. So the one that is investable by institutional is probably only one. But for retail, yeah, they also have interest in the bigger ones. But I guess I would say the more trending those retail names are more on the smaller cap ones, both in the upstream and also in the more oil support services one. Because for the oil and gas support services, I think in Indonesia, we have quite a lot of small cap oil services. So such as Wintermar, Lead, and a couple of other names. And but if we look at the share price, right, it seems like if you look at the numbers in terms of the earnings, right, to be honest, we haven't seen much uptick and realization from the oil exploration, from the expected higher oil exploration activities because of the higher oil prices that we have seen in the past year or so. So despite that, the share price has already rallied. So I think now for these names in Indonesia, right, a lot of the investor is still a wait and see whether the high oil price cycle that we've seen recently, is it here to stay? And if it's here to stay, will it actually drive another cycle of oil exploration that will actually support this oil and gas services names performance? But again, while we're talking about this sector, right? Big oil upstream names that is listed right now in Indonesia. There is another IPO coming in the sector. So yeah, we have quite a bit of anticipated IPO deals in Indonesia this year. So if you know Pertamina, you know, our main oil company, just like your Petronas in Malaysia, they were talking about IPOing two of their subsidiaries this year. And one of the subsidiary is the upstream oil producer, so Pertamina Hulu Energy, and the other one is the Pertamina Geothermal Energy. So Pertamina Geothermal actually just officially filed for IPO last week. So the numbers are already out. Expected valuation is already out, but specifically on the oil and gas, many are still waiting for this Pertamina Hulu, and they're probably going to be like one of the biggest IPO. And we finally have another exposure for an oil upstream names in Indonesia.
Very interesting. I'm not sure about SGX and IDX, but in Malaysia, what I have observed so far is that there is a lack of, I would say, financial understanding, especially within the retail space. The oil and gas players, that oil prices actually do not really impact their fundamentals. Yeah. So a lot of people are still buying and selling all this. A lot of oil and gas companies, just like they are like an oil ETF, you know. So if the oil prices are going down, then they will just sell. Every has improved recently, and I think the financial literacy has improved in this space. But so, you know, Fifi, hopefully Pertamina's IPO next time, it is not an oil ETF. Yeah. Shall we move into another sector, or do we want to mention something else in the oil and gas space?
No, I think we can move on to talk about other sectors.
You know, because Gerald and Fifi mentioned a very important point, in a sense that I do also see that when it comes to oil and gas, a lot of people are still very wary about valuations. You know, a lot of the oil and gas names are still very cheap when it comes to valuations per se. And I think this has got to do with ESG. And just now, Gerald was talking about how a lot of the oil and gas players in SGX are moving into renewable energy. The same is like oil and gas companies here, whether or not they are midstream or upstream, they're trying to put a lot of emphasis on ESG. So yeah, I think that is one of similarities between the two exchanges. Okay, so let's move on to the next one. And I think this topic probably, you know, Gerald will have a lot of say. And this is regarding REITs. Yeah, so yeah, Fifi should be very simple. But REITs, let's start with Gerald. Gerald, maybe, you know, for some of the Indonesian audience out there, maybe you can explain what is REITs and why is REITs very in demand in Singapore.
Okay, so a lot of people want to own property assets, but it will be impossible for most of us to own an office building in Singapore, a retail mall in the suburban area of Singapore. So that is how REITs can potentially be interesting. And then what they do is to take the property income and distribute it to unit holders. So effectively, you are being able to earn the rental yield on this very priced property assets without having to buy the entire office building or retail mall by yourself. Okay, and I think over the past few years, we have seen that whether is it an office building, whether is it a hotel, whether is it a shopping mall in Singapore, they have been able to consistently increase their rents. And because of that, the unit holders were able to get consistently higher payouts. So what this means is that for investors who are looking to build a passive income, where you're able to receive a regular payout from this investment that you have, the Singapore government would also be very encouraging of developing this as an asset class. So there are different incentives that are put in place. One of it that we recently discussed amongst ourselves was that in terms of the tax structure, there is actually very limited tax that are applied, whether is it from the unit holder perspective or from the REIT structure perspective. So what this means is that you would almost get a significant portion of the rental income after subtracting some of their expenses like utilities and management fees. So if you look at the REIT sector, it was actually one of the worst performing sectors in 2022. That is because as interest rates started to go up, the yields that these REITs were offering became less attractive compared to the government bond yields. So in the past, some of these REITs would give a dividend yield of about 5 to 6%, but by the end of up to above 3%, which means that for the additional risk that you're taking on, you are not being paid a very significant premium. And that was why we saw a very significant sell-off in the REITs. But interestingly, that has actually reversed this year. As the government bond yields has started to come down, the REITs has taken on a life of their own. They are one of the best performing subsectors on the SGX so far this year. And I think the other area that's really helped them is that while there are a lot of concerns about a potential recession, the fundamentals of the REITs remain very strong. If I look at, say, the prime office assets in Singapore, the rents have actually gone up to COVID. If you were to look at hotels in Singapore, if any of you have actually traveled to Singapore recently, you'll know that the hotel room rates are very expensive. So that has actually helped the rental income of the REITs, regardless of the subsegment that they are operating in. So I think with the strong fundamentals as well as the lower government bond yields, investors are starting to look at REITs once again, which is why when we look at some of the questions that the community in Singapore are asking us, a lot of them really relate to Singapore REITs and whether they are now looking more attractive as an investment asset.
And with the return of the tourists, probably a lot of the mall REITs can adjust their rent better this year as well, probably, I guess.
Correct, yes. So a lot of the recovery last year was driven. Malls did very well last year because people started to go out and have their meals once again. So the malls that were located close to the housing estates started to see the recovery first. By the time we got to late last year and early this year, a lot of the recovery is expected to be coming through from the downtown shopping malls. So especially those that are located at the prime shopping district in Singapore, I think everyone's looking out very closely towards how they are now able to raise their rent, especially when you start to see a lot of tourists really coming back to Singapore.
Yeah. I think it's nice that Singapore actually have an asset class like REIT, right? Because in Indonesia, the simple answer is we don't have REIT. I mean, probably because our 10-year government bond yield is actually is still giving like 6.5% to 7% yield, which is government bond, right? So yeah, I think that's probably why we don't have a lot of REIT in Indonesia. So yeah, short answer, sorry, no REITs in Indonesia.
In Malaysia, there are some REITs. There are some popular REITs as well, which is related to, again, shopping mall, hospitality, and whatnot. And I think recently the very popular REITs in Malaysia is got to do with the industrial properties, Gerald. I think in Malaysia there is a lack of supply when it comes to industrial assets and industrial properties. So that recently has got a very good traction. But yeah, I think I just want to highlight your point, right? That in SGX the REITs are very strong, and I think one of the point that you highlighted is because of the power of the Sing dollars. I think when we see how volatile ringgit is, or even rupiah is against the US dollars and against other currencies, and if we see the volatility of Sing dollars over time, I think what the government had done well in Singapore is that they really understand about how to manage the purchasing power of the Sing dollars. So yeah, I think that is not to be taken lightly, and I believe that is one of the reasons why a lot of foreign and even local investors love to invest in some yield in SGD, in Sing dollars.
So past performance is not reflection of future direction, but how a lot of institutional investors used to look at the Singapore REITs is that by itself, they are not very exciting as investment assets. But if we think about how they have been able to, say, grow their rental income by maybe 5% per year, they are also potentially able to make some acquisitions, and that can potentially drive another 5% growth in your distributions. And if your Sing dollar were to appreciate every year by 5% against a basket of assets, that is actually how they can consistently give you a double-digit return. And that was actually what REITs were able to do for most of the past decade before we saw the sharp.
Thank you. I would like to move on to another sector, and I think this sector is very relatable across 3 exchanges, and that is the plantation sector. As much as Singapore don't really have a lot of areas where people plant palm oils, but a lot of the Malaysian and Indonesian names are all listed in SGX. So that's very interesting. Yeah, maybe I'll start first. When it comes to plantation sector, what I see in Malaysia, in a sense that not a lot of people would love to actually buy and hold into a plantation counter. And despite last year when we saw CPO prices was like, I don't know, it spiked until I think 8,000 ringgit or something like that, which was very, very high. The interest was still very muted, it was more like a short-term investment, short-term theme sort of trades by both the institutions and retailers. And I would say the interest had faded somewhat because of what is perceived as an ESG concern when it comes to plantation sector. I'm not sure about how it is like in IDX and SGX, but yeah, that's so far what is happening in the plantation sector locally. There are some names which are a little bit more popular than others, and that has got to do with the way they sort of like explain themselves about their dividend yield, their dividend payout, to give at least some sort of certainty when it comes to yield. I think that helps some of the plantation sector's interest on this. Yeah, maybe I'll pass to Gerald first, then Fifi.
Okay, yeah, so there are a number of all these Indonesian and Malaysian upstream plantation stocks that are listed in Singapore. But you're right that I think there's fairly low interest amongst both retail and institutional investors in this name. One of the factors that you mentioned rightly is the ESG factor. I think over the years, that's actually became more significant, which is why I think even with the very high CPO prices that we saw last year, it became quite difficult for some of these institutional investors to invest in these names. I guess for retail investors, my sense is that because the demand and supply of palm oil is driven by a lot of different factors, it becomes very hard for them to make an investment call on the palm oil sector. Like you have to track the weather conditions, whether El Nino is coming, La Nina in another year. So I think investors, at least for the ones in Singapore, tend to prefer those that have more of a structural angle, less so for the ones that trade on technicals or short-term news flow, which is why I think the interest in some of the CPO names has not really picked up among.
Yeah. I think for Indonesia, right? So if you look at last year, of course, with the boom in coal prices and coal share prices, actually there in the beginning there was a lot of anticipation from retail investors who are positive with the CPOs and the plantation names. So a lot of them, I think, were hoping that the plantation names will similarly see a good share price performance supported by the high CPO prices. But what happened was, despite the high CPO prices, right, there were several government intervention that caused the Indonesian CPO names. So, for example, there are export restrictions on the Indonesian upstream CPO names. And actually, the news was just out today. I think one of our top minister was saying that he will probably again apply a similar restriction during Lebaran of this year to maintain the stability of the domestic cooking oil prices. So because of all this government interventions, right, despite the higher CPO prices, I don't think there's a lot of interest that is coming back from the retail investors into the plantation names. And for institutional investors, I don't have a lot of color in there, but I imagine it's a similar issue with the ESG. On top of that, it's again government intervention. So yeah, I don't think there's a lot of positivity in terms of the stock price for the plantation names in Indonesia.
I think one of the closely watched news and information for the Malaysian traders and investors in the CPO and plantation is definitely whatever is happening in Indonesia. I think it was quite widely mentioned, the spread between the CPO price in Indo and the CPO price in Malaysia last year was very high. The spread was very wide. So by right, that was supposedly to be a good thing for the Malaysian name, but for one reason or another, it was just temporary hype, and then it just basically all gone down again into the mean after that. But what's the fund flow when it comes to the plantation names last year? It is very interesting that, despite a lot of the ESG concerns and despite a lot of the ESG negativity that is being thrown into this direction by the foreign institutions, there was a period of last year where the planters share price really spiked a lot, and that was driven by the fund incoming from the foreign institutions in itself. So a little paradox over there, But yeah, let's talk about that another day. Okay. So I think let's move on to as much as I want to cover all the sectors, I think we should move on to another topic, guys. What do you guys think? Or do you guys want to cover one or two more sectors? Your call.
I think we can move on first, and then we see whether there are questions that the audience would have about specific sectors later.
Yeah. Maybe before I move on, I'll just drag this comment out. So BY here mentioned that infrastructure REIT in SGX is one defensive stock to look into. Any comment on that, Gerald?
Yeah, so I think there are really different subsectors, even within the REIT sector in itself. Actually, while most of them have seen some form of positive drivers, we see that there's actually still some divergence in terms of their performance. So as an example, some of the office REITs actually have got significant exposure to US office. And if you look at US office, the occupancy now, 2 years after COVID, is still only about 50%. So I think it goes back to having to understand what are the individual assets that each of these REITs or business trusts actually have, because while they are generally benefiting from this slowdown in increase in interest rates, we still see differences in terms of how their assets are performing. So especially for infrastructure REITs, again, because they can have quite different assets, it can be different as plants versus, say, asset in Australia, water processing company. So we need to look at what are some of the assets that are held by these different infrastructure REITs, because even then, some of these infrastructure REITs have seen differences in terms of their distribution.
Okay, thanks. And I think just maybe one last question before we move on from the sectors talk. Maybe let's quickly touch on the consumer segment. I think Dimitrio here is asking, the consumer sector in Indonesia, as much as, of course, if we cannot talk about names, maybe Vivi, you can just touch a little bit about the consumer sector in general for IDX.
Yeah, I guess, again, the consumer sector for IDX. So in general, I think a lot of the positivity is more on the staples names. Because again, the staples names are the one that I think have been able to pass on prices to the consumer because of the high commodity prices last year. And so far, the purchasing power in Indonesia seems to be pretty resilient. So it seems that the higher price increases that they did last year, it's not going to impact volume much this year. And but again, I guess without mentioning any specific names, right? I guess for consumer in Indonesia, it's also very important to look at the subsector of the consumer good itself, because I think you do have certain subsectors, let's say noodles, where the growth is not as strong, but I think the margin expansion can be pretty strong because they have a very strong purchasing power because of the competitive landscape where they have a very strong market share in the market. But also another subsector that has been recently getting more popular in Indonesia, which has not traditionally been have a lot of exposure, is the dairy sector. We have a new dairy company that was IPO'd last year, Cimory, and also and aside from Cimory, I think if you look at the dairy sector, we have Ultra Jaya as well. And I guess this is a subsector that is quite interesting because aside from the growth from the price increases, right, the volume growth from the industry itself is still growing high single digit to double digit in terms of the volume growth. So very two different subsector with two different drivers, but nevertheless high growth names with also interesting valuations. I think in terms of the valuations, a lot of them is still in the teens range, except for Cimory because they are a very fast growing company. But yeah, in general, so to answer the question, right? In general, a lot of positivity on the consumer staples. But again, for consumer staples, it's very important to look at the subsectors to see whether they will benefit from the themes that we mentioned, like the softer commodity prices. So is it true their main COGS for that subsector has been declining, or maybe only certain soft commodities that has been declining? And second is, are they able to actually pass on the prices without impacting the volumes?
Yeah, Nick here mentioned, Indomie for the win. Yeah, Indomie is Indofood. Go Indofood. Yeah, it's interesting that you brought up Chimori, because last year in Malaysia, we also had one of the very big IPO in the dairy sector, which is Farm Fresh. But unfortunately, unlike Chimori, it's been quite flat, the interest and the share price and the growth. So I suppose that is where the huge population in Indonesia really plays into the hand. Okay. Yeah, I think it's already. I would like to move forward. Um, so maybe I think just now Gerald touched a little bit about secondary listing. I would like to touch on IPOs and secondary listings and maybe even ETF for that regards. Fifi, what I understand is, when I was looking into the Indonesian market sometime in 2017, if I'm not mistaken, there were only about 500 public listed companies in Indonesia, and today there are like over 800. So that means your IPO must be super hot. So maybe you can touch a little bit on IPOs. Yeah, like what are some of the IPOs that is, and what are the characteristics of these IPOs and all that.
Yeah.
What has been
Okay.
the driver of such a strong IPO moves in IDX?
Yeah. Okay, so maybe just some stats, right? So people have a sense on how hot the IPO market is in Indonesia right now. So on average, right, if we look at the average number of IPOs that is done in the past, let's say 3 to 5 years, on average, the number of new IPOs is around 50 companies per year. And last year in 2022, the number of IPOs is 59 companies, right? So 2022, it's 59 companies for the full year, right? So 2023, we are only on the 6th of February right now. So only barely 1 month into the year. We already have 17 companies year to date that is already IPO'd and 5 that is book building. So that is like half of the total IPOs last year, only in the first 1 month of the year. So yeah, a lot of IPOs so far year to date. But and this is excluding some of the highly anticipated and more sizable IPOs that I have mentioned previously, right? Like the one that we were anticipating in the upstream EV metals, in the upstream energy and the geothermal. So what has caused this high jump in the IPO names, right? I think what I noticed is that a lot of the smaller companies are starting to do IPOs in Indonesia. So maybe the reason is because from the regulatory side, it's also making it easier for the smaller companies to do IPO. So we have some board that are specifically for developing companies. So you see that companies, even with a revenue of 10 billion rupiah, which is less than 100,000 USD of revenues, they can actually do IPO already. So yeah, it's easier for the smaller companies to IPO. And also second, in terms of access from the investors, right? The investors is also IPOs, because last time we don't have e-IPOs. Last time for you to subscribe to an IPO is you need to have an account with the underwriter. Then you can order the IPO. But since we have an e-IPO system already, so for example in Stockbit, right, you can actually, if you have a brokerage account in Stockbit, you can actually buy IPO from any other broker through the e-IPO system without actually making another separate account. So that has made it a lot easier and accessible from the demand side of the retail investors to actually subscribe to this e-IPO. And I guess a lot of the smaller companies also saw an opportunity on this side to actually go IPO and market their shares to the retail investors.
And Gerald, what about SGX side?
It is the complete opposite. We probably had about 800 companies that were listed 5 years ago. It's now come down to just over 600. So compared to IPOs, the listings have actually been happening at a faster pace because I think for some of the smaller companies, they found it not worthwhile to stay listed given all the compliance and related costs. So I think most of the IPOs that we have seen over the past few years relate to REITs. I think before 2022, if I look at say 2021, quite a number of the new listings in Singapore would be REITs, given that that was where a lot of investors were putting their money into. But obviously that couldn't happen last year. And I think likewise for this year, given that the interest rate environment is still a bit uncertain, even for the existing REITs that are listed on the exchange, they find that it is more challenging for them to be raising new capital. But I think what the SGX has then tried to move towards is just not to be focusing on stocks, but other asset classes as well. So for example, ETF is one asset class where there's been a very significant push. I mentioned one of the China EV ETF that was listed last year, but there are now more than 50 ETFs that are listed on the Singapore exchange. So I think that is one area where they see that we can potentially find a niche towards and would be making a very significant push towards this area.
Okay, thanks, Gerald and Fifi. For Malaysia, honestly speaking, I think this year it has started very well. There are about 7 IPOs, not 17, but 7. At least there are something IPOs in Malaysia. I would say a lot of them are pretty small in size. I think I would say on average, it would be less than 100 million US dollars, maybe about 80 million US dollars on post IPO market cap. But what is interesting, I would say, in Malaysia is that this IPO has been extremely hot. So, for instance, if let's say you subscribe to, I think on average 20 times to even 50 times, and therefore, your allocation is very minimum. And what has happened is, I think almost all of them, when it on the IPO day, it normally opened like insanely much higher than the IPO price. So you make quick profit, from that. So yeah, I think that's something that's interesting in Malaysia as well. But this has been pretty consistent, I would say, in Malaysia over the past few years. So there is not much drive, unlike in Indonesia. The deal has been coming in slowly. There are some SMEs that is going IPO and when they reach into a certain size. But yeah, we are definitely also, I would say, some of my fund manager friends are also definitely waiting for some of those bigger deals and bigger IPOs. But yeah, I think Gerald, you touched on some very interesting structures that SGX is trying to compensate for IPOs, like the ETFs and all that. In Bursa Malaysia, we do have some ETFs as well. We have got, because in Bursa Malaysia, we are not able to easily short the market. So there are some investment banks which sort of like come up with interesting ideas like inverse ETF and whatnot, some leverage ETF. But honestly speaking, there is literally no volume there. There's not much interest. So I'm not sure about how this in SGX, but in Malaysia, us try to come up with all these things. But yeah, honestly, the interest is almost close to none.
So I think in the Singapore market, you don't have a lot of investors who are looking at technical analysis, who are punting the market. So I think the demand for some of these more complex products would be still fairly limited. But we have definitely seen a lot of AUM inflow into the ETFs, especially the more established ones, relating maybe to, say, the REITs, the STI. Those are the ones that have attracted quite a significant amount of AUM inflow. Oh, and of course, another one that we talked about earlier would be the green energy ESG related ETFs. Those have actually grown quite significantly over the past year as well.
And Fifi, when it comes to IDX, is there a lot of all these complex or more complex structures? And what about, say, things like warrants and structured warrants and all that?
Yeah. Yeah. So recently, the exchange has been introducing, well, not the exchange has been pushing the brokers to launch more structured warrants, but I think this is quite a new product. So I think a lot of brokers are still doing a wait and see to see how the take up from the consumers for all these structured warrants. But I think what I sense a lot of more of the traders are waiting for, right, is probably right now the warrants is still more on one way. So it's more of a call option, right? So like just to betting on the share price to go up. But what has been, I think I saw in the roadmap that they were looking whether whether they're going to be able to do structured warrant for put option as well. So this is where it might get more interesting and get more interest from investors. And also, like right now, the structured warrant product is still very limited because it's only for the IDX 30, the IDX 30 names. So still on the very big cap names. So yeah, I think we are still yet to see how the uptake on the structured warrant is, because it's quite an early product. In terms of the ETF, we have had ETF for quite some time, but again, the issue has always been on the liquidity side. That's why in Indonesia, I think the main popular product is still mutual funds instead of the ETF itself because of the liquidity.
Great, thanks. I just have a very quick question. Is there any instruments in the IDX or SGX that allows market participants to short the market? So let me start with KLSE, right? In KLSE, we do have futures. We do have KLSTI futures. So because we have a KLSTI futures that is actually pretty liquid, that allows warrants. There is also puts, as Fifi mentioned just now. There are some KLCI put warrants, so that helps to again. From this, I would say 3 very simple structures. There is not many other alternative. There are, I would say, a lot of like regulated short selling. There are items like this, but I think it's difficult for retailers to access because it requires them to get in touch with the investment bankers, securities and borrowers, SBL, securities, borrowings and lending, before they borrow somebody else's securities to sell it and to buy it back at the later price. Yeah, I'm not sure that's easy for IDX or SGX participants to short the market.
Okay, so for Singapore, you also have the futures. That is one area that SGX went very big into. So I think they have been focusing more on the derivative side of the business compared to the cash equity side. And what kind of product, whether it's commodities, FX, indices, you would probably be able to find a future to be able to express a view towards that particular asset. Also, the futures, we also have this thing called a daily leverage certificate, which is effectively something that allows you to go long or short a particular stock or sector and get leverage to it. It is a high-risk product, not suitable for everyone because of the leverage element, but then you can effectively find DLC that allows you to potentially go long or short some of the Chinese tech names through some of these DLCs.
For Indonesia, I think again the short answer for retail investors, I don't think there's any instrument for retail investors that can easily access to short the market. Not just up limit and a downward limit in terms of how much share price can move in a day. So, for example, if share price maximum downward pressure right now is 7% per day, and then for upward movement, it's maximum 25 to 35% a day. So I think, there are still other limitations that needs to, that may not make these derivatives too attractive as well, right? I mean, for example, even if you have a derivative that can short the market, but the downside limit to the market is 7%, it doesn't really justify the risk and reward, I guess.
That's very interesting, Fifi. So you're saying that limit down is 7%, limit up is 30%, something like that.
Yes. So this is actually a measure that was implemented since the pandemic times. So actually, a lot of newer investors into the market has been benefiting from this, I would say, more asymmetric risk and reward, risk and reward limitation in the market.
Yeah. Well, it's just for everyone's info, in Bursa Malaysia, the limit up and limit down is generally 30% for stocks that is above 1 ringgit. Yeah. So Terence mentioned, she implemented in Bursa. So yeah, I do agree. I mean, that's like 3-to-1 risk reward. So okay. I want to touch some of the questions. A lot of them are very interested in IDX actually, Fifi. So maybe I'll just start with this one. So Guani here is asking where to read quarter reports and annual reports in IDX. Are they in English? If not, are they English versions?
Yeah. So for the audited financial statements, right, it's typically bilingual. So should not be an issue for you to read. Even for the annual reports, right, it's typically bilingual as well. So shouldn't be an issue. Where you can find it, actually, one of the specific company that you are interested in, typically they will upload it to their website. And second, you can go to IDX website, so idx.co.id. On the listed company section, they have a financial report section. Third one, you can sign up to Stockwith Indonesia. Doesn't have to be a brokerage account, but in Stockwith Indonesia, we also compile the financial statement of the different companies. So like the official filing. But also in Stockwith Indonesia, we also summarize the data for you. You can actually, if you don't want to open the financial report one by one, in our app, we also summarize like the quarterly reports, at least the big numbers, yeah. So of course you don't have the notes to the financial statement, but the big numbers, just like how you typically see in Bloomberg, it's available and summarized in Stockwith Indonesia.
And I think just something that is very related to that is which stock screeners do you guys use for IDX and SGX?
Okay. If I have to go first, actually, again, if you're in Stockwith Indonesia, right? So our screener feature actually already have several default ones that you can use depending on your style of investments, right? So for example, if you're more on a technical side, we actually have screener that can detect which one is reversing from its bearish trend, or which one is rebounding from its bullish trend, or which one is just doing a high volume breakout, right, today. But for those who are more fundamental or valuation kind of screening, we also have a lot of screener that are adapted from investment gurus. So, for example, you have the Buffettology investment screener. Of course, this is just the quantitative, right? It's just for your first initial screening before you analyze the qualitative factor further. But aside from this guru kind of screener, we also have screeners like which company is cash rich, which company whose market cap is actually closer to the amount of net cash holding that they have. And again, which company is actually in terms of valuation has actually become very cheap. So the low PE or the PE below mean kind of screener. So again, we have different screeners to cater more on your investment style, depending on your investment style.
Gerald, what is the stock bid equivalent of SGX?
So SGX has its own stock screener already, and you can actually do quite a number of things on the SGX stock screener. But I think for most Singapore investors, because a lot of it is driven by individual bottom-up stories rather than looking at it from a technical perspective. So I guess that is where we try to provide some insight on Beansprout, because what we find is that for the Singapore market, what investors actually want to know would be relating to, say, how is the office market actually doing before I invest in a office REIT? How do I actually differentiate between the Singapore REIT ETFs, given that there are 5 in the market? So those are the things that we hope to be able to share with investors through our platform. And then if there are other interesting ideas, new thematics that are actually coming up, those are the things that we'll also be writing about on the Beansprout platform.
Thank you, guys. Okay, maybe we'll move on to our next topic. We have about, hopefully we can wrap it in another half an hour. So Ben and Zhixiang here is asking about fund flow into the region. I'm not sure if you guys have the numbers ready, but yeah, do you guys know about this?
Okay, so for Singapore, we saw net buying into the Singapore market. And I guess that is really driving the strong performance for the Sing market from 2022 onwards. A big part of it will be investors moving their money here and looking at some of these value names, especially the ones that are benefiting from the higher interest rate environment, or potentially are seen to be names that have got strong fundamentals and attractive valuation. So that's one area that we have seen inflow towards. The SGX does not disclose the percentage of foreign participation because given Singapore's open economy, it's very hard to identify whether is it a local fund or overseas fund that is buying the stocks. But I think the way to think about it is Singapore is a very open economy. So a lot of the fund flows would be driven by global trends, especially the movement of the US interest rate direction.
Yeah. For Indonesia, right, the foreign participation on average, it's around 30% last year, 2022, and it has been around there in 2021 as well, so around 30%, pretty stable. But in terms of the inflow, right, so if we look at the overall 2022, we are still net inflow of around 60 trillion. So that is around 4 billion US net inflow. But if you look at on a quarter per quarter trend, right, so this is where it's interesting. So actually, first half of 2022, very strong inflow, but weaker inflow in the third quarter. But in fourth quarter of 2022, right, we started to see outflow. And that outflow has actually continued up until January of this year. So we are still seeing slight outflow from the foreigners. Not sure why. Probably maybe reallocating to other EMs or maybe like so yeah. We also in the equity market, but interestingly, inflow into the bond market.
For Bursa, what I can say is that I think foreign institutions' participation has been multi-years or even multi-decades low. So yeah, confident on the local bourse is definitely not there. I don't really have the breakdowns as to how many percent is local and foreign and retail, but I think retail used to be very high during the COVID era, and Bursa Malaysia was actually very, very hot in 2020, 2021, but it had really died down. So I think now probably if I am to take a guess, I think it's somewhere around 30% to 40%, or 30%. I would say 30% would be for foreign institutions or foreign funds. Yeah, but I don't have the numbers on top of my head. All I know is the number of foreign participations in Bursa is very, very low. So it's a complete opposite to Indonesia. But you know, when it comes from low, hopefully it can rebound back, and you know, then things will be better. Look into the cup half full, I would say. Okay. So yeah, I think we're already 1.5 hours in. I don't really want to go over too long, but perhaps I would like to really ask this question. And of course, because Fifi and Gerald and myself, we are quite close within the retail investment community. I want to ask this question, right? What do you guys think of fundamental analysis in your respective market? Is fundamental analysis day, like does buy and hold strategy work in IDX and in SGX? Maybe I'll start with Gerald first.
Okay, so I used to be an equity analyst. In fact, that has been the one and only job I've ever had in my entire life. So definitely, I believe in fundamental analysis. I will share some statistics. So if you look at the Singapore market, it actually looks very boring. And I think that is the perception that a lot of investors actually have on the Singapore market. But if you look at, say, even within the STI, of the 30 stocks in the STI, the top performing one was up close to 100% last year. And every year you'll be able to find a name like that, not even looking at the small and mid cap names, but just within the index that would significantly outperform the rest. Okay, last year was Sembcorp Industries, which is a renewable play that was transiting from coal assets towards renewable assets. I think in 2021, it was probably iFast that was benefiting from a lot of AUM inflow. So every year you'll be able to find a stock that would do exceptionally well. So I think that comes down to being able to find some of these names, which requires some degree of work, but it is also extremely rewarding because if we are able to find some of these names, then we can potentially outperform the general STI index. So yes, I do believe in fundamental analysis, especially in a market like Singapore where there can be a lot of overlooked opportunities.
Yeah, well, this is a hard question, yeah, but although my background is also equity analyst, so obviously I do believe in fundamental analysis. I guess I'm taking a more pragmatic approach for the Indonesian market. Basically, what I have seen, right, in the market, a lot of people who do technical analysis can still make decent and good amount of money. And even those who use fundamental analysis also can make this good decent amount of money. So I guess the message is that whatever you're doing, you just need to be very good in your investment style, right? Whether it's technical or fundamental. But again, what is interesting about IDX is that I guess it's similar to what Gerald say. If you look at on the overall market performance, right, like the GCI index in the past 5 years, CAGR return past 5 years is probably only like 4%, 4 to 5% total return. So, it's not like something to be excited about. So I guess the game is really on being able to identify the specific names that you're investing in. And because that's how the index performance is, right? I think it's very hard if you just buy the overall market. I mean, buy and hold on the overall market, right? Especially a lot of the names in our market is quite cyclical. So actually, if you look at the good mutual funds performance, right? These are mutual funds who has been able to have the correct sector positioning in each cycle. Because, for example, like in 2021, it's all about the digital banks. 2022, it's all about the commodity names. So yeah, fundamental analysis do matter. So you can understand like who will have a good outlook in terms of the earnings, and so the sector positioning, but also reading the sentiment, right? The investor sentiment, whether the digital bank 2021, they don't exactly have numbers. On digital banks has been very strong. Similarly, the commodities last year, right? Where before the commodity prices go up, share price actually go up before the earnings actually go up. So yeah, you need to view both the sentiment and the fundamental analysis as well.
What I like about Indonesian market is, you can really just simply buy BBCA, Bank BCA, and it seems like the share price is always going to be all-time high, regardless of whether it has like some downturn or but eventually it should follow the size of the economy, and it will go into an all-time high again. Not sure if you believe in that, Vivi, but I feel like BCA is like the equivalent of your S&P 500,
Yeah, during my career as an analyst, I think I have heard often from institutional clients, right? Why bother looking at other stocks in Indonesia anyway? I should just buy the banking sector or sleep on it for the next couple of years. So yeah, I think some investors do have that view, especially because in Indonesia, the banking sector actually made up a very significant amount of the market cap of the index. And again, because of that, the banking sector, basically, you buy Indonesia, most likely, if you're a foreign investors, is for the economic story, right? And if the economy does well, the very obvious ones, the banks will do well. So yeah, some are taking the view that might as well just buy the banks and forget about the rest of everything.
Yeah, I have some. I mean, some of my bankers in Indonesia, who's been working for BCA, they are there for life. So that's very interesting. I would say in Malaysia, I would share Fifi's sentiment in a sense that fundamental analysis definitely do matters, but so is momentum investing, so is thematic investing, in a sense that a lot of people. There are some certain segments of the investment community where they just buy and hold. Definitely there is, but a lot of them do like to get in and out and trade on a short-term basis as well on fundamentally good companies. But yes, there is also a large segment of the retailers who are very gung-ho into technical analysis in that regards. And when it comes to buy and hold, I think I personally am a big proponent, like Gerald as well, that it is not dead. In Malaysia, especially, I think if you look into some of the counters, out of which are really relishing on everything that is good about Malaysia. So, for instance, really companies where over time the share price and the value of the company can really keep growing into higher and higher levels. Yeah. Okay. Let me take a look what next that we can talk about. So, maybe I just want to touch a little bit about liquidity, right, Gerald? Because you mentioned about how important it is for liquidity and valuation. I think liquidity and valuation, I think they go hand in hand. Because honestly speaking, in Malaysia, one of the toughest part, what I see from the floor is that some people identify some really good company, very well run, and at the same time, it's value or even deep value. But one reason or another, it will never get into a fair valuation. It will never get the liquidity that it needs to get into the fair valuation, and it becomes value trap. Is such similar things happen in both exchanges?
Definitely in Singapore. So I think it would be possible to find some of these value stocks, but how long it actually stays a value stock and how long it actually takes to re-rate will be a different matter altogether. And I think tying it back with the previous discussion around fundamental versus technical analysis, this lack of liquidity probably also explains why there'll be less people who do technical analysis on the Singapore market and trade based on that, because you may not actually get the liquidity to perform some of these technical trades. But yes, liquidity is definitely an issue. And I think it has potentially gotten a bit worse over the years, which is why I think for most investors in the Singapore market, it would typically still be based on fundamental analysis and a buy and hold strategy, especially for the REIT sector where you're able to get such a very attractive yield by holding on to these REITs and building your passive income from there.
Yeah, Fifi, what about your side?
Yeah, on liquidity, I guess this is also a new perspective that I get ever since I moved from serving more institutional clients or retail clients here in Indonesia. I realize in Indonesia, a lot of the retail users actually they don't care a lot about the liquidity. Of course, yes, liquidity matter because that will determine whether it will be a value trap or it will actually, or whether the market value, the market price will actually catch up to the intrinsic value, right? But I guess what I've learned since I talk to the retail communities is that what has happened is that if it's a good quality company, it may be very hard to buy because there will be no liquidity. And actually that is the best time to buy, because eventually when the theme or the momentum comes for the specific sector or the specific company, right, the share price can move very, very quickly because of the low liquidity as well. So, and when the share price has performed, usually liquidity will suddenly come by itself. So this is actually an example that I have seen in one of the oil services company that I mentioned previously, right? It was a darling for a certain group of retail investors, but it was very hard to buy due to low liquidity. But of course, when the tailwind from the oil prices eventually comes in, right? Suddenly liquidity can spike up by more than 10 times a day. So and that liquidity has finally made it available to bigger insti funds, maybe not the giant ones, but some of the local insti funds can finally get into the name as well. And of course, once they get into the name, then that supports the liquidity and the valuation of the stocks. So yeah, I think what I've learned here is, at least from the retail community, not to place less importance on the liquidity of a specific stock. If the performance is good, eventually it will be rewarded by the market, unless there's a specific issue from corporate governance or others. Yeah, but if it's a decent company, typically it will be rewarded by the market. It's just a matter of when.
Very good answer. I really like your answer, Fifi. Okay, so I think you touch on corporate governance, and I think it's probably the right topic that we should talk about. After what we are seeing at the moment with Adani on in India. Whether or not that's a corporate governance issues or not, it's yet to be found out. But at least at the current juncture, people are questioning its corporate governance in itself and market manipulation, right? So yeah, this could be a very interesting topic because in Malaysia, people, or rather people on the floor, are always, there's a lot of corruption, there's a lot of financial engineering in the companies here. But as a matter of fact, it should be. I would think that it's pretty much similar across all markets, that this sort of things will definitely be an issue here and there. Perhaps maybe just want to touch a little bit about corporate governance and market manipulation in both IDX and SGX. Maybe Gerald, maybe you can share some of the factual cases in SGX recently that has been out in the news, and basically what are the things investors should be aware of, in both all markets, I would say.
So I think this corporate governance concern has actually been one of the factors that has led to lower interest in trading the Singapore market, as well as confidence towards Singapore stocks. So I think it started with the wave of Chinese companies that were listed in Singapore, which at one point in time were famously known as S-chips or Singapore chips, which were all of these Chinese companies that got listed here. It created a boom in trading activity in the Singapore market, but then subsequently, as some of these Chinese companies face financial difficulties, it actually left some kind of repercussions towards the view of such listings in the Singapore market. So that was one episode in itself. Then in recent years, there was also another high-profile case involving a number of small and mid-cap stocks in the Singapore market. Because there were quite a number of reputable companies involved, including the brokers. So I think that also eroded the faith of some retail investors towards trading these small and mid-cap companies. So I think with the erosion of trust towards some of these Chinese companies, towards the small and mid-cap companies, that effectively left with a very small subset of companies that investors were then left to be comfortably investing in, which were mainly your large cap names, which were in the index, as well as some of the REITs that we talked about earlier. So I think those two issues are in a way a bit interlinked. The MAS, the Singapore Exchange, has actually taken a more active role in trying to be preemptive on some of these corporate governance issues. But it's also a very tough balancing act because governance, it might deter some of the firms from listing in Singapore. But then on the other hand, if this continuously comes out as an issue, then that will erode the faith of investors towards the Singapore market as well. So it's actually a very tough balancing act, which at this point in time, we are still trying to find what is the best balance.
Yeah, I think for Indonesia, at least for the listed company space, right? I don't think we have had any big like financial accounting fraud or so on from a big listed companies. But of course, there has always been talks in the retail investors that certain stocks, the price movement may not reflect the real fundamentals of the company, and so they will always talk. There are potentially some market manipulation in the stock prices. I guess my thought to this was that, I mean, in any markets, right, there will always be a liquidity provider, and liquidity provider for specific stocks doesn't necessarily mean it's always bad, right? So I guess it's the homework of actually all investors to actually do their homework in analysis of what they're buying, so that you don't get caught up, right, in this abnormal move in the share price of certain companies. I mean, if you do your analysis and you realize that, hey, maybe the increase in share price is not justified. I mean, as a public investors, luckily we have the option to just ignore it and just not opt in on a specific stock, right?
For Malaysia, I think the high-profile cases of late is involving one midstream companies. The company was trading at about 1.6, 1.7, and today it's barely 1 cent. So this company was basically charged for submitting false statement to the exchange in relation to their revenue figure, which is about 6 billion ringgit. That is about 1.5 billion US dollars. So at the end of it, that figure is, it was falsified, and that is on the company front. When it comes to financial engineering and making your number a lot bigger than what it is. Other than that, I would say in Malaysia as well, there is all these concerns when it comes to just like SGX, penny stocks, right? So there was a very famous case, I would say, I'm not sure whether it was last year or the year before, but there was a media publication talking about the hidden hands on all these penny stocks, where about 40 to 60 public listed companies in Bursa, Malaysia, which is actually controlled by the same few individuals. So can you imagine a few individuals are controlling about 40 to 60 names, public listed companies in Malaysia. And what they are doing is basically asset shuffling exercise between all these 40 names. So what has happened is, these 40 to 60 names, they are basically exist in the market for reasons of making money from the stock market, not really doing proper businesses. So yeah, I think what has happened, because of all these things, a lot of retailers got caught, and that is where I would say the stigma, negative stigma, starts piling into the exchange, and that is why I would say, from the really good days for retailers in about 2020, 2021. And a lot of them have got caught, and a lot of them have lost money in the penny stocks. So they are, very discouraged, and that is why at the moment, not many retailers come back because of all this governance issue, because of all this market manipulation, and so on and so forth. But I guess that is where our role is, right, to basically help the investment community and to really level up the financial literacy in our exchange. So I think I just want to sort of like, end last topic. I want to just get your ideas and, get your view about the future of your exchange individually. Like maybe for Gerald, I want to ask you, because, I do have a lot of young millennials. When I see young millennials in Singaporean young millennials, it's like, hey, so are you guys investing in SGX? They're like, no lah, I'm investing in US, I'm investing in Tesla and whatnot. So yeah, perhaps the question is then, what is what do you guys see as the future of SGX, of IDX? How vibrant is the investment community, and I would say the financial literacy in the exchange?
So I think for Singapore, the perception when you speak to some of the young people is that, they might not be interested in investing. But actually, that is not really the case. We do see that actually people are very interested. It's just that they do not understand more about the Singapore market and to understand some of these interesting opportunities in the market. So I think that is where we try to come in to be able to share some of these interesting ideas with them, provide some fresh perspective in terms of companies that are actually potentially as interesting as the ones that might be in the US, but just that people do not spend the time and resources to try to understand them a bit more. I think in terms of the long-term direction, maybe what I have actually tried to share over the course of the past 2 hours is also that I think from SGX perspective, they are not just looking at it from a stock perspective, but that when we are thinking about investing, it can come through from different products. It can come through from ETF, it can come through from some of the derivative. And I think that is one area where we are trying to not just think about investing just from a stock perspective, but how if people are just interested in a broad-based diversified exposure, we are trying to get more ETF listings to be able to get them interested in it as well. If people are interested in the Chinese market but don't know how to buy shares that are listed in mainland China, how we can also potentially bring some of these ETFs into Singapore. So I think that is the general direction that we're heading towards. On our side, we do play a part to try to share some of this insights, this content with retail investors, such that regardless of whether we are looking at single stocks, REITs, or even this new ETF listings, individual investors have the right knowledge and tools to be able to make a more informed decision.
Yeah, I think for Indonesia, I think my answer would be quite similar to Gerald, but I guess in terms of the outlook for our exchange and our markets, right? I mean, the reason why I'm still working in Stockbit and Bibit is obviously because I have a optimistic view about our exchange. So just a little bit of data, right? Actually, if you look at our investors' growth in Indonesia, the overall investors number, it has went up from 2.5 million in 2019 to 10 million in 2022. So those are like 60%, 60% CAGR in the past 3 years, right? For stocks itself, it went from 1 million to around 4.5 million in 2022. So again, 60% CAGR, and this is considering that a lot of them are actually the younger audience. So the below 35 millennial kind of Gen Z of investors. And I guess this is where the similar challenge to what Gerald mentioned. What we want to make sure is that this very strong inflow of new investors, right? We want them to come into the market and actually stay, rather than coming into the market and then lose money and actually not go back to the market anymore, because they have some negative stigma that either the market is drag or it's very hard to make money in the market. So I guess that's what role that we are trying to play as well in Indonesia with Stockbit and Bibit. I guess from our content, you can see that we do focus a lot in terms of education for our users, and also where we also have a community function in our app. This is also important for these newer investors to be able to find where they fit in the investors community, depending on their investment style, because I think it's a lot easier. I mean, the journey to do your own investing is a lot easier when you also have a community of people who are also similarly doing investment with you. For specific stuff, it's very easy, right? Especially if you're fundamental. If you have someone to talk to at least bounce your thesis around, then typically it will make your thesis stronger. So yeah, that's the Indo market.
I think you guys have pretty much summed up everything for the Malaysian market as well. Yeah, I think I personally think that I tried to go and expand Stockbit into Malaysia, thinking that something like the goal and the vision and the mission of the founders in Stockbit is very much something that Malaysia market need. A healthier community, a healthier place to get discussion and whatnot. Because I saw an investment community in Malaysia that is a little bit fragmented. That is that can be improved. I would say the level of financial literacy. It's not a one-man show, right? Because because we can only do our part here. But I think hopefully over time, there's definitely a risk, that the young millennials that joins the equity market in Malaysia, they lose money and they're gone forever, and they decide to choose, be it to invest in cryptocurrencies or to invest in the foreign market. So that is definitely needs to be sort of like, we need to jaga them lah, like we need to really guide them over. So yeah, I think that's exactly what, whatever Phoebe is doing in Indonesia, we're also trying to do it in Malaysia. That is why we try our best to do like investor briefings with the public listed companies and whatnot to sort of like help people make better investment decisions, I suppose. And I think that is something that all three of us have in common. Yeah, and hopefully a lot of people would appreciate that over time. Okay, so I don't want to keep everybody up longer, but Fifi, I think there is just one or two other last question. I think there's one question from Terence that he was asking about how do you invest in Indonesia. I can't pull it out anymore, but yeah, it was out there somewhere just now.
Yeah. I guess if you're a foreigner and no Indonesian ID, that makes it a little bit more complicated, because you probably have to go to one of the regional brokers that have a Indonesia branch to actually trade in Indonesia. But if you're Indonesian working in Malaysia or Singapore, it will be very easy. Just sign up for our StockBit platform and you can trade the Indonesian market. Or if you go to Bibit, you can also buy government bonds and the fixed income and the money market mutual fund as well.
So can foreigners open in StockBit Securitas?
Not easily. There is some physical forms that you need to fill out. So yeah, not easily.
Okay, I think just maybe I'm giving my personal insight on this. If let's say you're interested to buy CGS CIMB allows you to buy Indonesian stocks, and they even provide you with the the tickers and the live, not live prices, but some market depth. I would say like one line, and it is like delayed for 15 minutes. But you can actually buy, and the stocks would be reflected in your portfolio in CIMB. Other than that, some other brokers you also can buy, but it's through offline. But yeah, it is definitely possible. However, do bear in mind that the FX rate and the brokerage fee is pretty high. So yeah, if I'm not sure, maybe in the future it is a lot easier to open a StockBit Securitas account. Maybe Fifi, once that day comes, do let us know, because I can see that there are a lot of interest from this side of the world to really want to invest in Indonesia. Okay, so I think before we wrap up, guys, any one or two last words? Maybe I'll start with Gerald.
So I think Singapore market is quite unique in itself. While generally seen as maybe not the first stop that people will look for stock ideas, but I think hopefully over the past 2 hours, we've been able to share some insights on the Singapore market. We talked a bit about the REITs, which are also fairly interesting. If you want to find out more about some of this Singapore stock, ETF, REIT ideas, feel free to visit our website, growbeansprout.com, and hopefully we can share more insights with you through our platform.
Yeah, I think from us, thank you for listening to us talk about our respective markets for the last 2 hours. I guess for StockBit Indonesia, most of our content is still in Indonesian, so may not be relatable to those who are based in who don't speak Indonesia. But yeah, I think if there is interest in the Indonesian market, we should be able to look into what Rodi said. Maybe we will be one of the first brokers that make it easy for foreigners to actually invest in Indonesia.
Great, awesome, guys. Yeah, so just some final words. Thank you, everybody, especially those that have sticked through the entire 2 hours. Thank you, Fifi and Gerald. I think this has been very interesting and very insightful talk about the 3 markets. So yeah, till we meet again. Thank you, guys. Have a great evening.